our class starts. So we will be learning about microfinance. So what is the meaning and role of microfinance? So these two subtopics we will cover. So basically, microfinance is a kind of a services, is kinds of a provision which provides various loans, as Kinkini was referring. It also provides various micro saving facility. It provides micro pension facility. It provides various micro insurance facility. Apart from all these financial facilities, microfinance is also indulged into providing other financial services to the poor and disadvantaged people. Poor and disadvantaged people who are specifically are living in rural area. However, as I was discussing, that microfinance is also now very useful in urban areas as well, in urban slums and for urban poor as well. India has been able to develop its own model of microfinance organization through various kinds of a model. Some of them are Grameen models, some are self-help group, some are client level models, some are self-help group bank linkage model or microfinance bank linkage model. There is partnership model. There is Kisi Vikas models. So there are so many models out there who are catering to the poor and disadvantaged people, having the microfinance models in mind. Most of the microfinance institutions in India attempts to go beyond savings and credit groups to provide microfinance services in the form of savings and insurance. So as stated earlier that microfinance not only deals with savings or providing credits, it also deals with insurance services, pension services. There are tailor-made services where they are also indulged into doing providing capacity building program, providing various skills and competency, various training and development programs to the poor and disadvantaged people. Microfinance provides financial services to those whose income is small or marginal in nature, and also the income is not stable, not secure. These people need various kinds of facility, out of which credit facilities are the most for several reasons, like their needs are small and arise suddenly, and the institutional providers of finance, namely the bank, demand collateral security which they cannot provide, and most of the time they are in need of funds to meet their consumption needs, like to meet expenses related to education or any illness or funeral or wedding, for which it is difficult to obtain institutional finance. For this purpose of investment in income generating activities, microfinance is a very crucial area where they can take loans and various helps from. Also, specifically women requires mostly many microfinance facilities, especially in rural areas where women are not educated, they are not well nurtured, they are also economically, politically, and socially deprived. So women like that, they come together and they form self-help group. By forming a self-help group, they have women empowerment and they have various income generating activities. With the help of those facilities, they improve the standard of living of their household. One of such case studies I will refer to is of Sumitra Giri. Sumitra Giri is the lady of Bangladesh. She lived in a village of Bangladesh, and her husband was, a truck driver. So around 20 or 30 years, she was married to this person, and suddenly one day his husband came with his leg broken, and now that person was the only bread earner of the family, and Sumitra Giri was uneducated. She didn't have any skills, any kind of a financial exposure was not there for that family, whereas they had three children and all of them are almost at marrying age. So Shumitra Giri went outside and she went to the Grameen Bank nearby. Grameen Bank is a unique model of microfinance which caters to the poor and disadvantaged people. So Grameen Bank made her enter into a group where ladies like this were also there, and then they together started a business. And with that business, Shumitra Giri slowly, with the help of the loans, which of course the bank provided, they have started the income generating activity. They have entered into the business, and with the help of that capital, she started improving her standard of living. She got her daughter married. She opened a tea stall, and she opened a vegetable vendor as well. She became a vegetable vendor as well. So his husband was sitting in the tea stall, and he made her son sit in the vegetable shop. So by this, she employed two of his family members into the business, and she in herself is also indulged into income generating activity. And she made her daughter also come to that group so that she earned her living. She helped her family to earn her livelihood like this. Shumitra Gere is a role model for that village. She created a well-established house, well-established family. She helped her, husband recover from the illness with the help of medicines she could bring, with the help of such financial support. So slowly, Shumitra Giri became one of the socio-economic political figures of that rural area. So, that helped other women of that rural area to indulge into such kind of an activity, which helped in the development of the whole village slowly. Not very fast, not overnight, but it has a slow impact, which slowly changed the villagers' perspective towards women not working. They realized that it was important that women are also working, and that is going to change the whole socio-economic and political conditions. They will be having a better life. So microfinance has such a huge impact on lives of people. Now, so what is
Ma'am,
basically, yes.
ma'am, there are banks like SIDB, and then banks like these, ma'am, also lend, ma'am, short-term loans, right, for the small-scale industries in India, especially.
True. True. CDB is a kind of a banking institution which provides banking services to the micro, small, and medium enterprises. So there is micro credit program models in microfinance which caters to this micro, small, and medium enterprises. However, the difference between microfinance institution and SIDB kind of an institution is that SIDB only provides financial supports to this micro, small, and medium enterprises, whereas microfinance institutions provides, other than financial support, they also provide various capacity building programs. And SIDB can also provide loans for longer period of time, but microfinance institution sticks to providing short term loan because they do not believe in collateral. Microfinance institution believes in social collateral. Do you know what is social collateral, Ronak?
Ma'am, I don't have the concept, but from the words, it can be meant that it is meant for, means, like the self-help group. You gave the example, like the a group of women starting, wanting to start a business, a same business, I mean.
Yes, basically,
Eh,
when a person comes to a bank for getting loan, the bank wants for a physical collateral. Like you keep your house mortgage or you keep your any property mortgage, so that if you are not able to pay the loan, so we can extract the money out of your property. But in case of microfinance, they are telling that they are poor and disadvantaged people. So if we are helping them, they do not have any property, and you will be astonished to know they also don't have basic ID proofs. Some of them don't have Aadhaar card. Some of them don't have voter ID card. They are not up to date. So it is very much difficult to enter into official activities with these people. So what kind of an idea microfinance institutions have brought up is providing social collateral. So what is social collateral? Trusting these people, making them come every week to them, so that they can show their face and they can tell how much money they can pay off. Like every week they have to pay off very small amount of money, but they need to pay off certain amount of money every week. And by having a close contact with them, they can be assured that they are not going to be defaulters, they are going to pay off their loan. And they have also created credit score. Like if they are repaying the whole amount of money, their credit score will increase. But if they fail to repay the loan amount, the credit score will decrease. So next time they will be getting lesser amount of loan. But suppose they have taken a loan of 20,000 and they have repaid the 20,000 within say 6 months. They have said that they will be repaying by 6 months and they have done so within 6 months. Then the loan amount will increase by 10,000, like it will become 30,000. Or in some microfinance institution it increases by 100%, that is 40,000. So it totally depends on institution to institution, but they do not believe in physical collateral. They have shifted to social collateral. That is one of the major advantages of microfinance institutions.
Yes, ma'am. Got it, ma'am.
Yes.
Ma'am,
So, hello, yes.
ma'am, I'm Ronak Chaturvedi. Ma'am, this SIDBI that you were talking about, this also does not require any collateral, right? Physical collateral.
No, SIDBI requires collateral, as in all the documents and papers of the microfinance institution is required to be submitted. They will be cross-checking, they will be verifying all your documents, whether the company is registered or not. That is one of the crucial criterion. Registration is mandatory, otherwise it's very difficult to get loans. So all those factors come in, but not in my case of microfinance institutions.
Okay, ma'am.
Yes. So, well,
Ma'am,
as I
this social collateral,
yes,
is that given by all banks?
a microfinance institution, as I was talking about, it's only about microfinance institution, not all banks. Social collateral is a concept which is purely of microfinance in nature. Like in Bandhan Bank, if you go to Bandhan Bank, they provide loans with the help of social collateral. Right. Yes, Shayok, you have raised your hand. You want to ask something?
Yes, ma'am. Ma'am, we have to be socially deprived to get this loan.
Well, no, actually, but yes, like if you don't have any support, then only you will go for these loans, because the rate of interest is generally higher than commercial banks.
Okay, ma'am.
Ma'am, these loans are given to the poor section, indigent section. So why the rate of interest is high? Like they are anyway poor.
Yes, it's true, but there is this client level studies also where they provide client based, but you're thinking like the interest rate is very high, but it's around 20 to 30% sometimes, that we refer to as at business loans. So they don't take huge amount of money. So if you bring a calculator, you can see that maybe if they are taking 5,000 rupees loan or 20,000 rupees loan, so 20% to 30% doesn't makes a huge amount. And also they provide a lot of flexibility in payment. So yes, that's a problem. But some again client level studies are there where they're very much flexible. Say so they can reduce the interest rate, but more they reduce the interest rate, the repayment strategies becomes more and more stricter. So yes.
Ma'am, can I say why, if you allow me, then can I say why the interest is higher?
Sure, sure, Kinkini, go for it.
Ma'am, I think that since there is no sort of collateral that is present, and as you have mentioned that there is social collateral, therefore, and the paperwork aren't done so properly, therefore the percentage of interest is higher as compared to the MSMEs and SIDBs.
Uh, Yes, that is one of the reason. MSME are micro, small, and medium enterprises who gets loan from institutions like CDBs and microfinance institution. Absolutely, Kinkini, as you were telling, that it's one of the reasons that they are lenient, considering ki, they will be giving loan money, principal money, as well as the interest money at the seed rate they are telling. Like suppose they cannot pay within 6 months, which they have guaranteed for, then they will be flexible. Okay, you cannot pay in 6 months, you pay on seven for 7 months or 8 months, whatever they are promising, but they need to be present and they need to promise that. So if they are taking a loan of 20,000, so around 20% to 25% they will be paying a loan interest amount of 4,000 to 5,000, which is also a huge amount, but not for rural area. If you go for Bandhan Bank, like in our household only, the maid which comes, she has taken a loan from Bandhan Bank. I know she has taken a loan to make her husband self-independent. She brought a rickshaw for her for 20,000, and she every Tuesday she goes to Bandhan Bank for paying certain amount of money. That amount of money is 2,000. Right. So every week, not every week she pays 2,000, sorry, 500 she pays. So that means 500 into 4, that is 2,000 she is paying monthly. So that means if she pays 2,000 monthly, so 20,000 she will be paying by how much?
10 months, ma'am.
She will be
10
paying by
months.
10 months, right? And 5,000 again interest. So maximum by 10 to 11 months she can pay off that amount of money. Right, so that's what I was trying to highlight, that the amounts are not, the interest rates are high because of those factor, because of this informalness and the risk they are taking of default. But yes, that is one of the limitations. But however, again, this limitation is of conventional microfinance. If you compare the conventional microfinance with that of the the innovative or commercial microfinance institutions or other models, client based model, they are tailor made. They can provide you benefits like commercial bank also. Like as I was talking about commercial microfinance, so basically microfinance is a social concept. As you can see, they are not making any profit, but commercial microfinance is something which they believe that they need to survive to cater to the social and disadvantage. So commercial microfinance are very strict and they do take profits out of it. They earn certain amount of money. The interest rates are also low. However, the repayment rates are flexible. But the defaulters, there cannot be any defaulters. They need to pay for it. There will be social collateral. Everything will be tailor made. But again, that's important, that whether they are making profit or not. So commercial microfinance, we will come to all those concepts that will be becoming more clearer as we move on. So now let's concentrate on the concept of microfinance. So microfinance is a concept that is helping the poor to avail of and create opportunities for economic growth. In India, microfinance has fueled the efforts of rural development, women empowerment, wealth generation by providing small scale savings or small scale credits or small scale insurances and other financial services, and as well as non financial services like capacity building programs to poor and low income households. Microfinance thus serves as a means to empower the poor and provide a valuable tool to help the economic development process. Microfinance can be interpreted in a broader context as both as microcredit and micro savings, even though microcredit and microfinance have come to be used interchangeably. Because previously there was this pawn shop. Pawn shops was also a part of microfinance institutions only, and they used to provide pawns. They used to provide credits. So basically, previously microfinance was microcredit, which is conventional microfinance model. Conventional microfinance model says that microfinance is equals to microcredit. But as the time changed, as the need arose and situation has changed, Now, microfinance is not a package of microcredit, but microfinance is a package of both financial and non-financial services. And financial services is not only about microcredit, it's also about micro savings and micro insurance kind of services. It is also about micro pension services and other financial services like capacity building programs are also provided by microfinance. However, when the term microfinance is used, it implies some other services, as I was telling, that is facilities for savings and availability of services for insurance of the assets acquired with microcredit. And microfinance has come to be referred to as a small scale financial services and technical assistance provided to rural people who operate small or micro enterprises, provide services, work for wages or commission, and other individuals and group working at local levels. Right. So nowadays, microfinance also helps technically to the organizations as well. They also interfere into operational activity of the organization. So after understanding the concept of microfinance, let's come to the official definition of microfinance. So NABARD, National, can anyone tell me what is it? NABARD, what is the full form of NABARD?
National Bank for Agricultural
National
and Rural
Agricultural, yes, National
National Bank
Agricultural,
for Agricultural and Rural Development.
National Agricultural Bank for National Agricultural Bank and Rural Development of India.
No, ma'am, it's
AB.
National for
No, ma'am.
National
National Bank for
Bank for
National Bank.
Agriculture and Rural
National
Development.
Bank. Okay, National Bank for Agricultural and Rural Development, right?
Yes, ma'am.
yes,
Yes.
ma'am.
So NABARD, you can go to the website of NABARD actually. You can find so many amount of materials in relation to financial inclusion and microfinance. They have provided small advertisements for microfinance, which will also provide you a better insight into the concept. So NABARD has stated that microfinance is a provision of thrift, credit, and other financial services and products of very small amounts. Mind it, it's of very small amounts to the poor in rural, semi-urban, and urban, provided to customers to meet their financial needs, with only qualification that transactions value is small and customers are poor, right? So very clearly, if we extract the features out of it, you can see very clearly microfinance institutions are those institutions which provide credits and other financial services as well as products which are very small in amount. To whom? To the poor of all the three areas: rural area, semi-urban area, urban area. Why? So that they can meet up to their financial needs. Okay, only the fact is that those poor are those vulnerable groups are coming to this institution who are wanting the financial support which are very small in amount and that the customers are poor. But however, as I was telling, the concepts are changing. Now, that is the definition of NABARD. But now you can see in various commercial banks and other institutions, they are also providing many services which are provided by microfinance. So they are providing those services to individuals as well. So, microfinance refers to the provision of small loans without collateral security, that is, they provide social collateral. Microfinance refers to such kind of financial services which is provided to the poor and the low income household and whose access to commercial banks is limited. However, in the contrary to the definition of NABARD, I would like to see that now microfinance is also entered into commercial banks. So the microfinance is the institution that provides such services which are microfinance institutions. So that we refer to it as microfinance institutions. Next, let's talk about what is the role of microfinance. So basically, microfinance is being viewed as a very powerful tool for uplifting the economic conditions of the asset less poor through the group approach that ensures active participation and involvement of the beneficiaries in effective implementation of the program. So very clearly, microfinance is a very powerful tool for making the assetless poor to be assetful poor by involving a number of beneficiary, and they help in implementing the government rules and regulation and programs created by the government as well as non-government institutions. Population is in urban area. So this 69 point something population which is in rural area has a huge amount of population who are mostly illiterate, who are unaware, who are not getting enough opportunities to develop. So microfinance is one of such revolutionary tools which if implemented on those areas, we can make them assetful individuals. We can provide them with ample opportunities which GPL provides, which globalization, privatization and liberalization provide. This way we are not going to only benefit them, this way we are going to help ourselves by making ourselves financially independent. Also making them financially independent will result in economic growth of the country as a whole. So microfinance has emerged as a needful program to cater to the needs of the most underprivileged people, that is the tribal areas, Dalits and women in rural area. Microfinance institutions are the organized support to empower and uplift the underprivileges of the society. Microfinance has a very crucial role to play in employment generation as they're focusing on employment income generating activities. Microfinance is a new method to meet the credit requirement in rural area. Since the bank borrowing requires collateral and the deprived class does not have any type of such collateral, the success of Bangladesh Grameen Banks, that is one of the models which has been produced by Professor Yunsof, attracted the attention of Indian policymakers towards the microfinance and microcredit, which are the new entrants in realm of present rural financing. In the development paradigm, microfinance has evolved as a credit-based policy and programs to cater to the so far neglected target groups like women, poor, rural deprived, etc. Microfinance supports the micro entrepreneurs and small businesses through various financial services as well as various capacity building programs. Microfinance also focuses on healthcare services to the poor and underprivileged minded healthcare services, which is mainly insurance kind of a services, and there is various capacity building program that where they provide basic trainings in case of like awarenesses like fever of malaria and chikungunya, or awarenesses of AIDS, awarenesses of various illnesses they take off, and they provide basic training the how to prevent from such illnesses, and they also provide micro insurance facilities. Well, not to leave the educational part, microfinance institution also works towards providing the primary education, mainly primary education to this rural children of India. They also provide various in loan. There is a category educational loan which they provide at a very cheaper rate. Next, microfinance through models like self-help group aids in housing development of the vulnerable people, mostly of rural and semi-urban area. So that helps, like self-help group, which helps in housing development. Actually, they are focusing on improvement in the standard of living of individuals, because it is believed that if one household is getting established, if the one household is getting a good standard of living, like the example of Sumitra Giri, then being a role model, other households will also start improving. And housing development is one of the most crucial, infrastructural development of the rural India. Microfinance aids, supports the startups, the early business models with financial as well as non-financial services. Now let's come to the difference between conventional finance and microfinance, the current microfinance model. So yes. So the difference between conventional finance and microfinance, I have already stated few points already, but still for a more constructive and scientific way of writing the answer, the mission itself, the idea is a bit different, though these two concepts are from the same box, which is of microfinance. But in conventional banking models, the mission is to provide clients with financial services and products with favorable returns to shareholders. However, microfinance focuses on to provide financial products and services to a low income population that does not have access to conventional commercial lending with favorable returns to shareholders. With respect of services, conventional banking focuses on strictly financial components. If you go for commercial banks or conventional banking, they are not going to provide you apart from microcredits or loaning services. And in commercial banks, you can deposit also money, you can save, so basically they are financial components. But in microfinance, you will be getting both financial benefits and non-financial, that is social component. Of course, not you, I mean the poor and disadvantaged, vulnerable groups of the society I'm talking about. And in urban areas also, this kind of institution exists. Like Navjot India Foundation, the founder was Dr. Kiran Beddi. She was just a police officer, and slowly she entered into creating Navjot India Foundation, where it's in Noida, where she created, an army of rural women who wanted to become self-independent. She made them both financial and non-financially stable, so that they can earn for their family, they can earn for their country, for their society, which will bring all over sustainable development in the country. Now let's talk about clientele. In conventional banking, favors like large-scale, well-off, literate clientele can satisfy stringent loan conditions, banking culture, not ready to lend to low income clientele but will accept their savings. So basically the problem is of documentation. They even cannot provide the basic Aadhaar card document. So getting a loan, getting any kind of a services from conventional banking is a challenge for these poor people. However, savings and credit facilities for lower income households and small scale enterprises in urban areas and small farmers in rural area, like banking culture ready to serve lower income clientele with few opportunities, are there in case of microfinance institution. Fourth point is administration. So complex administration procedures, which are often incapable of understanding needs of poor, small savers exist. And in case of microfinance, simple procedures that are easily understood and adapted to target population is there in case of microfinance institution. Next is premises. So conventional banking here, economy surplus transferred as financial services to upper income population is their premises, their target customers. Whereas in case of microfinance institutions, economy surplus transferred to low income population with no access to traditional commercial lending is there. Next point is that of savings. Conventional banking does not mobilize small scale deposits or rural savings, whereas microfinance institution mobilizes saving from low income urban households and rural savings. Next point is selectivity. Now, selective regarding clientele, that point is definitely there in conventional banking. They cater to upper income population and they kind of ignore poor and disadvantaged people. Conventional banking avoids clients who make small deposits. If does mobilizes their small savings only and usually does not give small loans to the same people who have made the savings on their banks. However, in microfinance institutions, they accept small amounts of regular savings from this small group of people. However, they don't cater to upper income population. But things are changing now. Microfinance like Bandhan banks are also providing loans. Like if you go for like if you being from not from a poor and disadvantaged society, if you go to take loan from Bandhan Bank, Bandhan Bank is an ideal model for microfinance institution. You can get loan from them. Also, microfinance institutions are very adaptive to those small sums of money. Their financial technology gets adapted to small sums of money, and they provide small amount of loan against the deposits, micro deposits, which this poor and disadvantaged people have made. Next point is loan application procedure. Now, in case of conventional model, the complex loan application procedure exists. There is a huge amount of documentation, which is quite impossible for the illiterate, mainly illiterate people of poor and disadvantaged people based on the client's income and asset. Whereas in case of microfinance institutions, simple, non-bureaucratic access to credit based on client's character and capacity to pay exist. Next, we can talk about loan processing. So, a complex processing of loan requests, loan delivery is not prompt, whereas prompt approval and minimum delay in disbursement is there in microfinance institution. They will be getting easy access to loan once they have provided a social collateral. Next point is collateral requirements. Collateral requirements, deposits or savings account in a commercial bank or property which can be mortgaged does exist. And here, according to the local condition and borrower's capacity to repay loan, collateral requirement are given, and sometimes it is not given at all. It is totally based on social collateral. 11th point, cost versus risk. So lower operational cost and risk, however not attainable for low income clientele and small scale enterprises exist. Whereas in case of this one, microfinance, high operational cost is there and there's a higher risk reflected in interest rate charges, however more accessible. 12th point is repayment rates. Here the repayment rates are lower, conventional cases, whereas the repayment rates are higher due to lending methodology in microfinance institution. So I guess you got the point why the rates are high. Next point, number 14, that is financial cost. The financial cost is lower in conventional model, whereas the financial cost is higher in traditional lending model. However, financial cost is reduced in commercial microfinance model and client-based microfinance models. Then accessibility, well, the accessibility to for conventional bankers is complex, very different, very difficult or sometimes impossible for micro entrepreneurs to access. Whereas accessibility in microfinance institutions, it is a whole process. Simple access to loans are there. If you talk about opportunity, then a loan delivery in conventional model is not fast, not prompt, which affects the high capital rotations. However, in case of microfinance institutions, they promote loan delivery meets needs for micro enterprises with high capital rotations. 17 point, that is accessibility to micro entrepreneurs. Micro entrepreneurs are afraid to approach a traditional commercial lending facility. Low self-esteem and self-confidence is there in conventional kind of a banking with respect to MSMEs. Whereas micro entrepreneurs feel comfortable approaching microfinance institutions, their confidence and self-esteem are increased. In returns, clients are faithful and feel responsible towards the organization. So yes, that was your module 1. So that consists of the syllabus of module 1. So today I just completed your module 1 syllabus, that is meaning, role and importance of microfinance, introduction to financial sector for the poor and the disadvantaged, and the difference of conventional finance and microfinance. Next class, I will be covering principles of microfinance, institutional structure, and delivery mechanism. So next class, we will be completing the introduction chapter, and we will be doing a case study on it. Class?
Thank you, ma'am.
Ma'am,
Yes.
ma'am,
Yes, sure.